Focus on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in at January 13th, 2022, and the stock market has some unfinished business. Today was a crazy day, at least in the morning. We got what we wanted with the CPI data. There was a reaction, and we started off good, but somehow it turned into a lower volume day, and we didn't do much. Despite a lot of volume coming back to currencies, the stock market volume was kind of low. But even though we got everything, you just can't shake this feeling that the market still has something on its chest. So we still got a couple of catalysts. Earnings season is really about to get kicked off tomorrow with the banks and earnings. So at least we could look forward with that. But what we saw today and how things are playing out, it is setting up for something interesting. And on top of that, I'm really excited. I have a secret indicator to show you. Yes, I mean, you may be disappointed. I know how YouTube is nowadays with some of y'all, but what I'm going to show you is something that could really be the next market leader. Not TLT, but it will really show you how we're going to play out here, especially as we get into earnings in the Fed. So we got a lot to talk about. I'm going to go over everything that happened in the market today, what we're looking at for tomorrow, the rest of the week, the catalysts and all that, the plays that we made, and then the indicator, and then the plays for the rest of the week. So you guys know what you need to do. Drop your thumbs up on the video if you find this helpful, and big shout out to all of you who have been. I love and appreciate every single one of you. So God bless you. And if you don't know, we are live Monday through Friday, 30 minutes for open, youtube.com/the stock market. We are going to be there live in the morning. So come, you'll see all the plays. But right off the bat, today was calmer than expected, but the initial reaction was good. And this is really what was kind of shocking about today, because out of all of the CPI reports that we've had in the last 12 months, any of them where we have opened up above 0.5%, they have not ended neutral. But essentially by the end of the day, there wasn't really a gain here on the market. It was an average return, surprisingly. So considering Powell and what we got, and even what we've been talking about, we definitely were expecting something bigger. So now the follow-up may be more important, but to understand why it really didn't move today, everything hit expectations. Yes, 7% CPI is not a good thing. Real wages are down several months in a row. There wasn't really a lot of good in the data, but everybody has already been pricing that in for the last month or so, and even the higher rates and everything else. So nothing was really repriced today, and that was good. And that's why now the follow-up that we're going to get, and then earnings kicking off, this is going to be key. But like I said here in the beginning, it seems as if the market has some unfinished business. And pretty much what I mean by that, we still have a lot of volatility lurking. You could still kind of feel it. People buying puts and calls, they're not really feeling safe just yet. You look at the downturn that we're at, or what we've even experienced, it's not the worst, it's not the best, and it looks like we still need to decide a lot of things. And thankfully, we have a couple of catalysts, but the fact that nothing got repriced in today after aggressive repricing with how we've started this year, the market is still probably going to find its footing here. So keep that in mind. But coming into your first pretty picture here, baby, this is the secret indicator. So I'll show you what I'm working with, but this is the dollar chart. You may have saw it, and what people are talking about, it broke through its 100-day moving average, but this isn't the real key. The one thing I will say, if you've been reading a lot of financial content and staying up to date with the news, you probably heard about the dollar a lot, or at least you should have. This took a lot of the headlines today, and the reason is now it's breaking down, and it has a lot of macro trends, but you've experienced this before and you've seen it, and now this is the secret key. It is going to be the dollar. What you got to watch for, does the market now follow the dollar, or does it do its opposite? So as it's breaking down and we're talking rate hikes, usually, or most likely probably, the dollar should be going down from here. But now the real question you got to ask yourself, if the dollar goes down, is the market going to rip off that like we saw last year around March, April, May, after we got over the inflation stuff, after getting some of those big numbers? Or are we going to watch it all correlate, and then pretty much dollar sells off and then it starts hitting stocks and everything else? So this this is going to be the real key to watch. I think it will be decided after the Fed and earnings, but in the meantime, if you watch the dollar and it makes big moves moving forward, I'm expecting a bigger move after the Fed. That might be the leading indicator, and if you haven't been watching the dollar, now would probably be a time to look at it. Again, volume in the market was low today, but one thing that surprised a lot of analysts was the amount of volume in Forex markets. It is starting to pick back up here to start off the year. It usually is low up until like the later weeks of January, so now it's sticking back up. If we start to get currency volatility, it could have some effect, but overall, we've seen this before, and the dollar hasn't moved in a while, and now the question is, if we get a big move and a breakdown on the dollar, is the market going to correlate it, or is the market going to inverse it? And that could say a lot, especially if you look at where the SPY is. So, coming into the company news and events, keeping it simple here. Again, there wasn't too much except the CPI. There was the Fed, and you heard from Bullard, and my man was as hawkish as he can be. But again, with the main concept of today, there wasn't really too much repricing. So one big thing to watch out for, it is going to be Lael Brainerd, and maybe I'll start there. We are going to get her Senate testimony, and she has already released her pre-written statement. She said curbing inflation is quote unquote the most important task. And then she also talked about an inclusive recovery. And this right here, I know some people they love this, they don't like it, but this is showing you what is important to Miss Brainerd, and this is partly why she got elected. But now just think about the employment targets and all of that. If she's going to have more weight on the Fed here, an inclusive recovery, that just pretty much means more stimulus for a little bit longer here. So keep that one in mind. But that's the first piece. The other piece, and this one low-key may develop into a black swan depending on how it plays out, but China has shut down another 14 million people, or put them on lockdown in the city. I think it was Tianjin, but it was over COVID. And then on top of that, they have started a little bit of beef with the U.S. because now with all these infections and the zero COVID policy, they are canceling flights, they're stopping travels and shutting down ports. But now the U.S. said that they might have to escalate tensions if China keeps canceling these planes, because the U.S.-China air transport agreement, they got that in place. They said they are not being consistent with their obligations. So we'll see what happens with that, but watch out for that. And then finally, Microsoft, we made a play on this one. This is going to be interesting to see, but we did hear about this in the past before. It kind of just got a little bit of an update here today. They have hired a key Apple engineer to make their own chips. I think it's going to be mainly for their Azure platform, but we'll see where they go from there. Other than that, there wasn't other crazy news. You got natural gas going crazy because of the weather. You got oil hitting a new high, and it's at a very key level. And then you got a little bit more of the Russia-Ukraine drama, and then that was pretty much it. But coming into tomorrow, it looks like it's going to be pretty straightforward. We're waiting for the response, but now if we get more volume and even more volatility in currency markets, we may start seeing things move around, and that may create the divergences we need. And on top of that, we got earnings, so I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 or 4 different stocks that I'm looking at coming into tomorrow. I made one today, but one of them I will be looking at in the morning, and it has to do with earnings. So pre-earnings plays. Let me go over the plays, but please let me say this now, and I hope you get it. Pre-earnings run-up, here is how you do it. You make an option trade before their earnings, usually day before or a couple days. That's usually the best window, because then you don't have to deal with any of the fluctuations. You've seen us go early, but usually day or two before, and the idea is get the premium and play the premium as earnings come in. It usually drives it up. Sell before they report, and then after they report, you get back in and then play the follow-up. So that's what we've been doing. We did it last week with Walgreens, and now 2 of these plays, these are going to be the ones. So the first one, JP Morgan, that is an earnings run-up play, and the best part about it, they are going to be reporting on Friday. So pretty much it's going to make a move tomorrow, and then coming into Friday, the premium should hold a level. It all depends if they report morning or night. We'll talk about there on stream, but in general, I did decide to make a play on here, and this is what I'm going for. It applies to any of the banks that report this week, so you could even play this on Wells Fargo, and this is what I pretty much did. JP Morgan's a strong bank. It also has the ability to move big, and the contracts were fairly at a lower price. I didn't have to pay a couple $100 per contract. They have 20-cent, 50-cent contracts, so I like that, but then I also got a put play on Wells Fargo, so I grabbed the one that I like. I put puts on the other one. Wells Fargo also has been outpacing, so they had a little bit more meat on the bone on the downside, and the idea is buy it right before earnings. We let the premiums play out wherever it it's at. We sell before, try to get a small 20 to 50% gain depending on what the stock does, and then we sell out, and then after we report, we go back and get into it. So as far as the play, I grabbed 10 of the February 185 calls for 50 cents, and this is something you'll learn with the pre-earnings plays. It's all dependent on the level of risk reward that you're looking to get, but mainly the amount of risk that you want. If the earnings is reporting this week on Friday, I could have went with the short-term contract, but sometimes it doesn't give you that level of safety, or if it doesn't play out as perfect. So that's the thing to keep in mind. But sometimes if you get a little bit of time and you're a little too far out, the pre-earnings run-up will be minimal. So very simple with this play. The logic is it's decently close to the money. It's not there, but I'm assuming by the time we get the earnings on Friday, the premium will go up, and naturally this play with IV, or if the stock moves in that run-up direction and you see the stock kind of make the expected move before they report, we should be able to benefit off of it. So that is the first play. Coming into the second play, I actually decided to finally get a put, but this play kind of reminds me of the Facebook that we got last week, but I did it on Amazon. So I got the put simply because they have been cheaper than any time in the last few weeks. So just imagine what you've seen in the market and just say that out loud. Amazon puts were cheaper today than any other point in the last couple of weeks. So I like that opportunity, and really Amazon has just been outperforming tech over the last couple days. They've been holding up a little bit nicer, so that's just what reminded me of the Facebook. We have the earnings play for calls, and this is pretty much how I'm viewing it. If we do get a big bounce, I think those calls will go crazy since they were so cheap. So I went a little bit bigger on the put, and now my idea is I was able to grab a decent amount of put protection today without having to go too crazy as far as the premium or paying too high of a premium. As far as the play, I decided to go with the Amazon February 30-20 put, so it's about 10% out of the money. And this is what I'm saying, even if it's pre-earnings run up, in this case, we are going to get earnings in the next few days, and I'll show you kind of how Amazon played out last earnings and what I'm keeping it in mind. But this one is a little bit further out of the money, so even if there is a run up, these are a little bit harder to move. You got to keep that one in mind. But I decided to go with this play. It is expensive. I spent about $3,000 on it. We have $900 on the call side, but the idea is I should be flipping these before the company reports. I'm willing to take wherever it's at day before earnings. So trying to take advantage of some of the premiums as far as the option, and you can see what I'm talking about here. This is the chart, and I guess I was a little bit wrong. It was only one other time that they were trading around this like 33, 34 level. It dropped a little bit below there that one day, but for the most part, this has been the bottom here of the contract. So remember, the Facebook play kind of looked like this last week where it had the run up, but remember, Facebook outperformed, so the contract went crazy. That's what this contract was able to do on the put side. It shot up, and then now it's came down even more. And then if you even look at the daily chart, even though the stock is bounced, I mean, this is just the put coming into earnings. It's just looking at a low level. So pretty much it has the ability to move a lot leading into the earnings here in about a week or two. But if we do get some of that earnings move and it levels out, I'm assuming these will be somewhat decent. So that's the main logic. But then coming into the chart, I'm going to show you their last earnings and kind of what I'm expecting. This was where they last reported, but you could see as we came into their last earnings, there was a big sell-off. Then there was finally that bounce, and then it kind of had a 2-day drop, and then leading into the next week before earnings, it was able to move. So we're either right here or we might be on this one, but we'll see. Either way, I think the put might be a little bit decent here, and like I'm saying, just with the market and unfinished business, I like that this could give me some exposure. If that play goes up, we hit like the Facebook, take the profits, and then we just still keep playing both ways. But that is the second play. Coming into the third play, here is the other earnings one. So TSM, they're going to be reporting tomorrow morning. We don't know what is going to happen, so that's the problem. But essentially, if the earnings is clean, I'm going to go for the post-earnings play. Now, what do I mean by clean? Is that it just easily interpreted. Essentially, if they beat, they raise guidance, it's overall good, the stock is good, factor in a positive continuation. If it was bad and then they had bad guidance and it's not good for the chips, you could play other chip makers, but I would go for the downside and play that. I'm going to go for the easy one where it's just simple. Yeah, that will have a continuation in whichever direction it played after the earnings based on the report. So that's going to be the easy part about it. Be there in the morning. You'll see me do this one. And then finally, this one just caught my radar. I mean, I'm not too sold on it. We already have plays, but Lucid, and they do have that share lockup. A lot of people keep talking about it. I believe it's on the 19th, but I'm very surprised to watch the premiums come back. So today, the old May premiums that we had, we were down 50 to 70% on those came back to positive just after like 2 or 3 days of holding up. I was pretty surprised on that. So I'm taking that as a signal. There is a lot of demand and hype, even for GM. Again, I am loving the auto companies here, even if they're not going crazy because they are already high and a lot of them are holding a certain level of stability, but Lucid is in that criteria. Oh, they just don't sell cars. But I still like it. We're going to see what happens with that one. I'm going to be keeping my eye on that. And then for the rest of the plays, all I did was grab a city in the morning. We talked about this yesterday. Kept this one small. I spent about $200. I grabbed the March 77.5 call for 55 cents. If you notice any of the other plays I've made with like the banks, if we could confirm the momentum or there's a different catalyst, I want a little bit more time. So that's what I did. But I got a small amount today because even this morning, I thought we were going to ride the wave up, so I didn't need to really force any of the gapped up premiums. So I said I'll take something small, and Citi had the catalyst. The reason why I'm playing this is that they're spinning off the branch segment out there in Mexico, and I really like that because if they take it public, they can make a lot of money. Even if they sell it, they'll make a lot of money, but usually if a different environment, we've seen Wall Street go crazy over some of these spinoffs. In this one, I think from a finance perspective and to make Citi kind of clean up their balance sheet, I overall like it, but keeping it small, we'll see how earnings plays out. We might be able to double dip on this one. And then I grabbed the Intel. I grabbed 10 of the 53 puts for next week. So this does not cover earnings. It expires right before. Grabbed them at 23 cents, spent about $230. But the logic was the news there with Microsoft and the chips. Intel reacted. We got it early, so I wanted to make a play. But my logic with it was, wait, we got TSM in the morning, so I could grab the put. You got the news. I'll keep it at like $200 short term. It could move a lot. But the main idea here is tomorrow in the morning, if TSM is bad and they have bad guidance and it hurts the rest of the chip makers, I'm assuming this one might come back to life. Otherwise, we'll get clapped on it. But that was a news play. We're going to see where we go from there. And then the JP Morgan and Amazon. And then that was pretty much it. As far as everything else, going to be watching materials and then even steel. They absolutely killed it today. Again, alongside natural gas as well. So watch out for that. Ford still holding up. That stability is key. Believe me, especially with how much it's moved up here. So don't sleep on that. But our other plays are down 50% on the short terms. I may be double dipping. I'm just kind of waiting for my moment. You know, he needs to do his thing. But we'll see what happens with that. And then Uber, the puts came up a little bit today, but not too crazy. Again, remember we have the Wells Fargo ones, but holding this one into earnings, similar logic there. We got a little bit of time, and depending on the volatility in the market, we may see those come back. So watch out for that. Wells Fargo, and even if you want to compare it to JP Morgan and why I like them so much, hopefully you can see why I grabbed calls on JP Morgan and then I got puts on Wells Fargo. I mean, Wells Fargo has already had a 10% move at the start of the year. So if Wells Fargo does good, great, but they may have a little bit of downside there, or that's why I was figuring the puts, but the puts did not move at all. Still down 50%. I didn't lose more money on them today, but still just down 50% from the day before. But don't forget, it's earnings, and these are going to be exciting, so watch out for that. And then Intel, like we said, Abivi, there was a ton of call activity here, and really, I don't know if we're going to have to wait till earnings or their ex-dividend, but this thing has been very, very stable, especially with XLV. I want to look at the premiums, make sure they're not too crazy, but just don't forget about him. If it makes a big move down, that would also be exciting too, but it is holding at a very unusual level of strength here, so just keep your eye out for them. Altria too had the little dip and then bounce here. It's been holding up good, and then Pierre, Philip Morris, they're really leading, so gonna see what's going on. But one unique factor is that the leaps are still holding up. So last time we were up here and had the little pop and drop, the premiums on the leaps were quick to go down, not this time around, so watch out for that. I don't have any other open plays besides the leaps, so we'll see what happens. TSM, all about the earnings or the post earnings tomorrow. Even NVIDIA may get affected. I did look at the options. I said I wanted to average down, but subtly that little 2-day move, some of the contracts were up 50% from the low, so I was like, I can't justify it, so I didn't do it. But if those do come down, I will want to average. And then Airbnb, they came up pretty nice today. Again, held at like 170, or they closed like 169.34. Overall, very positive day, and a lot of people have talked about the downside there with Omicron, but it shouldn't be too long until we kind of turn the corner, except at least in China. So we'll see how that plays out. And then finally, TLT and the dollar. TLT was interesting today. The velocity slowed down, but he crept back in here. So we got to see what happens. Watch out kind of now for a pattern like this. I was looking for more volatility, and we'll see what happens, but it kind of looks like it's hitting a range and then dribbling out a little bit there. Even if you compare it to the beginning of the year, you kind of had that here before the break, and that's why now with the Fed and everything else, we'll see what happens. But thankfully, premiums have gone down, so we'll see the opportunity, but the premiums are in the middle now. They're not too cheap. They're not too expensive. But like I've been saying here, the real question is the dollar. In a weird way, we already know what to expect from TLT, especially if that keeps going down. But the dollar, this is what you really got to worry about, is the correlation. And this is why I'm saying this is the real key. You could try to pick apart the smaller moves here, and we've done that a couple times, but just look at the broader trend on the year. You could see dollar is up, market is up. If the dollar fall, you see what I'm saying? What's gonna happen here? So like back in March, you see we hit a top and then we started dropping, and then you'll notice we went up for a small period. And I think it kind of matches up here. Then the dollar chilled out, and then the dollar kept declining, and then the market started to react, and then you'll get little moments here where the dollar and the market will correlate, and it really looks like what we're setting up for now, but especially the catalyst behind the dollar. You could even see the volume. This is going to be a real big key to watch, and pretty much that's going to be your new snitch indicator, at least in the short term. And if it really starts to lead, we may get the answer, but it could be difficult, so you better keep the helmet on. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, get the word, not the commentary, but the Cole loves you. I love you, and we'll see you in the morning. Let's go.